As Canadian lumber exports to the US face ongoing uncertainty, market conditions remain cautious. With moderate demand, shifting pricing, and looming trade policy changes, mills are adapting quickly. Today I'm joined by risk analyst, consultant, and specialist in lumber, Alex Mead, to discuss this and more. Thank you for joining us, Alex.
Thanks for having me.
What is the current state of demand for Canadian lumber in the US?
Demand is lackluster. It's moderate demand. And the way I describe it, it's a three-legged stool. There's three components of demand. You have the single-family demand, you have the multifamily, and then you have the DIY, do-it-yourself. The single-family is at about 1.3 million starts, and that's pretty good demand. 1.8 is really good. Back in the recession, we've seen 800,000, 700,000. So single-family demand is okay. But the DIY demand, because of inflation, because of, call it, less cash, you're not really seeing that. And the multifamily is down. So demand is lackluster because you only really have one component that is actually doing okay right now.
And what strategies are Canadian mills adopting in anticipation of potential duty hikes on US shipments?
Yeah, so if we just look at the Canadian sawmills, what they're trying to do is before the AR6 is implemented, which will be July 28th between August 15th. We don't know the exact dates, but they're trying to ship as much lumber as they can into the United States before the duty hits. And the Canadian production, the softwood lumber accounts for roughly 25% of the U.S. lumber consumption. And so they're trying to get everything ahead into the U.S. prior to the new duties. And then what they're going to do is they are going to try to raise prices in anticipation of to pass on the duty. So you're seeing a wide strategy. Some sawmills are trying to pass on the full 20%. Some are trying to do 4%. And others are just curtailing production. They're going to reduce their production because they can't operate at a loss. In the Canadian housing market, the demand is just not big enough to absorb all the Canadian lumber.
And so how would the US react to these higher prices? Could this lead to a stockpile of unsold lumber on the Canadian side?
Yes. You will see a stockpile of lumber on the Canadian side. Prices will probably get pretty ugly. You'll probably see price depreciation in the Canadian side. The US side's a little bit different. I think if you look at the short term, there's enough supply to meet demand. But as there's a shift in the interest rate environment, if the Fed starts to cut rates, the supply that's taken out of the market is out for good. If we want more supply, we're going to have to pay the duty. So short term, it's going to, there's not an issue, but longer term, you are going to see higher prices because of the less supply and increase in demand.
And you mentioned lumber price earlier, having ended Q2 roughly at the level that it started at. Do you think the rise in price that started early May will continue and test March 2025 all-time highs?
That's a great question. I was looking at that today. In May, the futures contract is delivered to Chicago, so it has about $112 of freight in it, and we were around 540 FOB Chicago, and just yesterday we traded up to 680. That's about a 25% price increase in futures, and in the same time frame, the cash went from 570 FOB Chicago to 617. We only seen an 8% increase. So futures does a good job of pricing in the uncertainty or the anticipated duties, the price risk. We're just not seeing that in the cash market. So to answer your question, unless the cash market can get to 680, unless the cash market and demand can lead futures higher, it's hard for futures to continue to stay at these prices. Ultimately, you will probably see futures come back down to cash unless that demand component can engage and move the market higher.
Excellent. Well, thank you very much for your analysis, Alex.
Yeah, thanks for having me.
For more videos like this, please do like and subscribe.